Coming up on Market to Market, big grain agreements return to the Midwest. Agriculture's heavy hitters gather to discuss world food policy. And we'll have the commodity market analysis with Sean O'Leary and Ross Baldwin next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, October 27th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Consumers defied the wisdom of economists, ignoring high prices, interest rates, and fears of a recession last quarter, and kept spending. The Commerce Department reported a 4.9% increase in gross domestic product from July to September as Americans splurged on vacations, concerts, and sporting events. The long-lasting sector, classified as durable goods, expanded by 4.7% last month, with transportation equipment leading the way. The government's preferred gauge of inflation, the PCE, came back with a 3.4% growth year over year, which is still above the targeted rate of 2%. Global purchases keep the economy in motion. When one of the buyers of grain is a country with more than 1 billion people, it can be a market mover. This week, a signing checked all of those boxes. David Miller reports.
Representatives from China were in the heartland this week. On Sunday, a delegation that included China's ambassador to the U.S., Jay Feng, visited the Rick Kimberly farm in Maxwell, Iowa. The farm is the site of the 2012 visit by then Vice President of China, Xi Jinping. The following day, Feng watched as 11 letters of trade intent were signed by U.S. and Chinese soybean processors at the China-U.S. Sustainable Agricultural Trade Forum. U.S. processors ADM and Bunge signed purchasing agreements with Chinese processors China Agri and Sino Grain Oil.
As a Chinese saying goes, people are the foundation of a nation, and food is of paramount importance.
The actual monetary value of the agreements was not released, but the news of the prospect for billions of dollars in trade moved the commodity market slightly higher. Later in the week, Chinese Vice Governor Jin Wei of Hebei Province also visited the Kimberly farm. Iowa and Hebei have had a sister state relationship for 40 years.
This is an honor for us to welcome you to our home and the whole delegation. We are so happy that we have been able to get together again.
I believe we will be impressed by the things you will show us, and we will get back to China about your things here.
同时，我们也会促进更多的这种友好交流与合作、可持续的发展。
And we will promote more friendly exchanges and cooperation in the future.
Along with sitting in the same tractor where Chinese President Xi Jinping sat more than a decade ago, Wei was given the opportunity to drive one of the Kimberly's tractors. Later in the day, Wei witnessed the signing of trade memorandums of understanding between groups including ADM and China's food-grade oil processor, Hopeful Grain and Oil. The value of these agreements also was not disclosed. For Market to Market, I'm David Miller.
Norman Borlaug is known as the father of the Green Revolution. From his roots as an Iowa farm boy to the wheat fields around the world, his legacy lives on each October through an event aimed at finding the next big idea to help feed a growing global population. Peter Tubbs has a wrap of the week.
Leaders in agriculture from around the world descended on Des Moines, Iowa this week for the annual World Food Prize Laureate Ceremony and 2023 Borlaug Dialogue.
We are called to a responsibility and a call to action to harness change and to provide assistance and help as a result of the challenges that conflict creates. And we're certainly called as a humankind to respond to the crisis of climate. There is no question that it is impacting and affecting the way in which we live and will continue to do so.
This year's laureate, Heidi Kuhn, along with other past winners of the prize, started by Nobel Peace Prize winner Norman Borlaug, took part in sessions over 3 days under the umbrella of this year's theme, Harnessing Change.
And I just, Cheryl, would like to hold this shovel up in my battle cry for peace and the words that are respected by various faiths in Old Testament. May they beat their swords into plowshares and their spears into pruning hooks, so that nation shall not lift up sword against nation, neither shall they learn war anymore.
Kuhn won this year's World Food Prize for work she conducted through her nonprofit agency, Roots of Peace. The group focuses on the removal of landmines and unexploded bombs, making way for use of the land for agricultural use. Global food issues and security garnered more headlines following Russia's invasion of Ukraine. In fact, the number of people in the world dealing with food insecurity has gone up in recent years for a myriad of reasons.
When Russia invaded Ukraine, we became very well aware of how conflict has an impact on food security, and it's one of the major causes. I think 60% or so of the people who are food insecure, they live in countries that are experiencing conflict.
Exactly who is leading the charge comes in many forms, whether it's government, private industry, or foundations. All those who participated this week spoke about the investment needed by everyone who eats.
Frankly, we need to reimagine our politics to say, let's get serious again about recognizing that America has always been the world's leader on fighting hunger. Let's do it again. We have the skill and the will and the sense of moral purpose to get that done.
From day one, in a humanitarian setting, we need to think, what is the long-term plan to get from shipping in food and water to investing in local resilience in these situations? Because we cannot continue fighting hunger in humanitarian situations the same way as we have. We need to think more long-term, and we really need to cooperate on that.
There was also a call for the next generation of thinkers to choose agriculture as a career to help meet the challenges of feeding a growing world.
Everybody in this room today can play their part in evangelizing for, getting involved in food production globally, because we need the brightest and best young people to come into our sector and to drive us forward to meet those huge challenges I spoke about.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market Report.
China's agreement to purchase U.S. grain, along with a stoppage of shipment in the Black Sea, balanced the trade. For the week, the nearby wheat contract lost 11 cents, while December corn cut 15 cents. China canceled a buy of Brazilian soybeans, while harvest progressed under favorable weather in the soybean complex. The January contract was flat, and December meal improved by $18.50 per ton. December cotton expanded by $1.98 per hundredweight. Over in the dairy parlor, November Class 3 milk futures decreased 65 cents. The livestock market was mixed as December cattle lost $2.40, January feeders cut $7.35, and the December lean hog contract put on $4.48. In the currency markets, the U.S. dollar index added 35 ticks. December crude oil sold off $3.08 per barrel. COMEX gold expanded $24.80 per ounce, and the Goldman Sachs Commodity Index fell almost 8 points to settle at $592.80. Joining us now, double analysis today, Sean O'Leary and Ross Baldwin. Ross, we'll get to hear from you in a minute. You get to hear Sean for a few. Is that all right? Yeah. Okay.
Thanks for having me, Paul.
All right, so Sean, this week,
good to see you, Paul.
Good to see you, but there's an asterisk with this Kansas City wheat. What Why does that contract continue to be such a drag on the complex?
You know, I think that wheat complex, price-wise, kind of has a $5 corn problem, you might say. You know, Chicago just can't seem to get above $6 and stay there. And you know, that Kansas City contract isn't any help for any of it. We saw a decent rally in I wouldn't say it was a decent rally in the wheat, but it was a rally. Kind of hard to find one, period. But you look at the corn market as well, you know, trades above $5 for what seems like 10 minutes and then, you know, just fades.
When you look at wheat as a whole, and we just showed the chart where it has really kind of leveled out any volatility, do you anticipate that continuing in that type of trading pattern for the foreseeable future?
I do, and you know, both the corn and wheat, historically, if you take some of the bigger news items out of the market, and there's not really anything that's a catalyst to move it, can spend 6, 8, 9, 10 months in a range, you know. And it might be a little bit of a wider range, but if you look at some of the put and call premiums in both corn and wheat, those are cheap options. And I'm not saying they're necessarily a good buy. Cheap options typically get cheaper, but that kind of gives you an idea of a lack of volatility in those markets.
We just had a global story there about the World Food Prize, and we also have global events. But there was this chatter that's been growing. We've lost interest as a market in what's going on with Ukraine and Russia and having any influence on the market. Do you buy stock in that statement?
Well, I think that's you know, you talk about the corridor being open right now. That has been kind of a back burner, not much of a story there, really, although it is a very, very important item. And, you know, it's unfortunate that those stories have kind of fallen to the wayside with some other things going on. But
what's influencing corn then the most for you right now?
Well, it's not really anything out of South America weather-wise. You know, there's still some drought issues, in particular with Argentina. But, you know, nothing really moving the market to a great extent.
Are we at a point right now where we've seen the harvest and it's a little higher than we anticipated and that's kept a lid on things?
I think so. You know, I've got customers that want to re-own corn, and it hasn't been walking away from anybody. Yeah, it's not like you have to be quick on the draw with getting that done. And I think any rally for the time being is going to be kind of a shallow one. And you know, if you see anything north of $5, I would say it looks like a good sale.
Unless you're trying to feed some animals right now, Ross. Do you see this as a buying opportunity for someone who's trying to feed some cattle?
For someone that needs to get coverage for corn needs, I think corn's at a good value down here. I think futures, as Sean alluded to, I don't think we're really going anywhere in a hurry. But when you look at these corn futures around 480, if you can get your hands on it, which it's hard at this point in the harvest, the farmers are putting it in the bins and locking the doors. But if you can get your hands on it, I think it's a good value. When you think about $5 corn, just say, it works. Your cost of gain works with $5 corn here.
Sure.
And I think the biggest thing that corn would have, say, a month or two down the road from now is basis improvement that cattle feeders, end users need to be thinking about with corn.
Do you have the sense that that was a factor in last week's Cattle on Feed report? The lower level of corn, the anticipation of being sub 5 for a while?
I think the biggest influence that corn has probably had on the fundamental aspect of cattle will be as you feed them a little bit longer versus what we had been when the cost of gain was running higher, when corn was, say, $5.50 to $6. But recently, no, I don't think that's been a huge influence on the market, but there's no question as corn gets cheaper, we will put more pounds on the cattle market.
So we're going to hold them a little longer still because it pencils out
Yep. And with what we've seen recently, up until this latest meltdown, I would call it, in the feeder market, it was cheaper here 2 months ago to keep cattle on feed that you had, because your cost of gain was manageable, than it was to sell them and then turn around and go buy high dollar feeder cattle. Now that's changed here recently.
Things are moving, and things are also moving for live cattle, but I put Sean on the spot. I'm going to put you on the spot in your first time here. Let's go Andy in Iowa. He has a question that he submitted. And Ross, it's looking forward into 24. What's the outlook on live cattle for late 24? Will we see them bounce back or hold steady?
Late 24, my outlook is more favorable as you get out into 24. This cattle on feed report that we saw, the 106% placements, the bulk of those cattle hit the Feb-March timeframe that we did add that the market wasn't expecting. I think we will pull those numbers ahead. We're current today. We've seen that in the cash markets this week. So I think we will pull those numbers forward. But as you work out into 24, keep in mind, when we started last year in 23, we've got one of the smallest beef cow herds on record. Those numbers aren't increasing. We didn't magically just create more cattle last week in that cattle on feed report. The other thing to keep in mind is the USDA today is forecasting beef production to drop 6.3% into 24 versus 23. That takes 3.6 pounds per capita of beef out of the market. I think as we work through 24 out into Q2, Q3, and then even beyond, I think the market's got a much more favorable story than what we've been dealing with today. But it's hard to be totally bearish and doom and gloom with cash doing what it's done.
Sean, do you, with your clients that aren't maybe still in cattle, or listening to what Ross is saying, how do you, I'm not saying help, but how do you take advantage from your side of the situation, knowing what the needs are in livestock areas?
Well, do you mean if you're a producer?
Yeah.
In the way of taking protection?
Yes.
Okay. I've got cattle producers that have done literally no hedging for some of them better than a couple of years. And I'm sure glad I wasn't the one pushing that on them. They've done really well to, you're taking your chances, but that's the way that market's been. But nothing lasts forever, right? What goes up must come down. And they had a fairly good recovery this week. So I think going forward, even though there are still some bullish numbers out there, it's going to be a little bit more of something that you might want to entertain the thought of, put it that way. And if it's not an outright future sale, maybe you do something like covered short calls,
And help me out here, Ross. I believe there's been some dramatic changes in both cash and futures here in livestock recently. Do you see any of that changing anytime soon?
The quickest change that we could see, I think, over the near term would be futures recovering. The cash market this week, we had some early panic selling, per se, in the week, and rightfully so when we were down the daily limit on Monday with February. There was some early 183, some 184, but today we were trading 185 in the south and some 186 out in western Nebraska, which is right at last week's values. So I personally think we're on good footing. It shows how tight the market is, how current the market is. There's cattle being sold in the north that are going south for grading reasons. The cash market, I don't see that falling out of bed. It would have did it early this week if it was gonna. I think futures would be the thing that could maybe have the most movement. And hopefully it's a recovery.
All right, Sean, let's go back to grains for a moment. We'll get back to some more livestock here. I want to talk soybeans. That's an interesting market because it just seemed like a couple of weeks ago the story was completely different.
Yeah.
What's changed?
Yeah. Well, going back to South America, we're going to be trading the weather down there, but there's really not much weather to trade right now. The last stocks report that we had, that gave beans a pretty good bump. But going back to corn at $5, beans at $13, just can't seem to hold it, they're probably going to trade closer to $12.50 before they would back to $13 or $13.50.
That 13 just kept lasting on the board longer and longer. So are beans in the teens here to stay for a while?
I think so. I think the downside on those are kind of limited for the time being. We've got Argentina that's still got areas where they really need rain. You're not really seeing a big rally in the market, but it's plenty early, and I think it's way too early to assume that things are going to come off without a hitch down there.
The weather in South America, yes, is a big story. However, we also I had written down that the corn was kind of squeezed between what was happening with wheat and what was happening with soybeans. And what was happening with soybeans was it was China reneging on purchases in South America. So it wasn't a weather story at all. So I guess we have two pins in South America controlling our destiny on futures?
I would say that's fair. That's fair. China can cancel, but they're going to be right back at it. And it's always better for us, obviously, if we're competitive price-wise with South America. And sometimes that takes a little while to come into play, but I think we're there now. Pacific Northwest prices are where they need to be. So
yeah, the PNW is always a discussion point. Mm-hmm. Also, that meal has had a life of its own. First it was oil, then it was meal. What's the hog producer? Was this a response to some input changes, or we just had to bounce higher? Because it was pretty dramatic in soy and hogs. I'll get the right commodity here.
Hogs have certainly been on a downward spiral, and it's really interesting if you look at the hog futures today on the close and you look at what live cattle have done. They both, right now for the time being, going home this weekend, look like maybe a V-bottom is in place, and very similar. Hogs, just the aggressive sell-off they've had, they were due for a bounce. We have seen decent hog exports out of the country recently, so we've priced a lot of bearish news in for the hog producer, and I don't think hogs are out of the weeds yet, but as we start working out through 24, I do think hogs do have a much better story down the road.
How good of a story?
I think the interesting part for hogs is when you get into the back half of 24, I think we will see a much better number with tighter numbers, hogs, as we've been liquidating due to negative profit margins. There's just no question. So I think the hogs in the back half of 24 really get interesting with cattle prices in the back half of 24. And that's where cattle really got to come down for hogs to drop much lower. So I think the two of them can support each other as we start moving through 24.
I think in the hog market you could see a $10 rally pretty easy.
Over what time frame?
That can be accomplished in 6 or 8 weeks, I would say. They've had from, I'm guessing here, but that December contract, if you go back to the highs from several months ago, we're probably $20 off of that level right now.
I made him answer a 2024 question. I got to make you do the same thing.
All right.
I want to put a bow on some corn and beans contracts as we look forward into 24. Let's talk with Jim in Illinois and what he had for a question. Sean, should we be selling 2024 corn and beans right now?
I would certainly entertain that thought, yes. If you look at these rallies that have been shallow, I think those are the rallies you have to take advantage of. Barring, South American weather changing dramatically, for example, there's just not enough of a catalyst to make you think that after you see a 30-cent rally in corn that you're going to be leaving 30 cents on the table after that. So I would, reward that rally, and the same with beans. If you can catch it a little bit over $13, that looks to me like an opportunity. It's something you kind of want to stick your toe in the water. You might want to hold off on anything overly aggressive, but I would entertain the thought of making some sales, yeah.
All right. Well, guess what? We're going to step out of the pool for just a little bit. All
right.
We're not going to put any toes or arm. We'll do that back at Market Plus.
All right.
Sean O'Leary, thank you very much. Russ Baldwin, thank you. Not so bad, right?
Thanks, Paul.
We'll get to know him more in Market Plus in a moment. Thank you very much, gentlemen. Hold on there because we are going to pause the analysis and continue our discussion about these markets, and like I said, get to know Ross a little bit in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. We were producing the Market Plus and the Market Analysis podcast before the concept was mainstream. Stick with us for those two offerings or explore Season 8 of the MTOM podcast. Next week, new regulations shorten the path for genetically edited seeds. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name, is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.